Okay, very good afternoon to all of you. Today we're going to discuss the question number one from the last year past paper. Suleiman Limited Managing Director has recently attended a seminar on fair value accounting versus historical cost accounting. He considered that fair value accounting plays an important role in the structuring financial disclosure in the financial statement and ensuring that necessary information is available to different group of people for their decision making stakeholders. Okay, hence he recommended to the board that the company should adopt policy of revaluation of fixed asset every 5 years. As you are the CFO, the company depreciate PP straight line over the 8 years. No exceptionals residual value. Assume that today rate is other, thus VCAK Hatara company prepares financial 31st March each year. It is currently estimated an item of PP purchased on this date would have a residual value. Would have a value to the business is 140 on 31st March 2026. Write a report to your managing director. Assume that argument for the against policy of fair value accounting. Argument for and against. You need to support fair value accounting. Why is better? Not is better. Okay, that's the pros and cons should be there. Your director has a solid general knowledge accounting, but he is not a qualified accountant. So the technical terms and guideline research finding you may use in the report will clearly extracted and cited, not the given citations. Okay. Okay. So let me go through here. You have fair value accounting. Once you say the fair value accounting, you should know refer to the SLFRS 13. That SLFRS 13 fair value. What is mean by fair value? So based on the standard, if I think my here you can see the standard fair value measurement. So I'm not going to entire standard. I will let's discuss the definition. The fair value simply means the market value. Okay. The SLFR is defined the fair value as the price that would be received to sell an asset. If we sell an asset, it will be received. Or if we pay for obligation, pay to transfer a liability in orderly transaction. It means normal ordinary course of business between market participants at a measurement date. At a measurement date should be there. Okay, that is the meaning for the fair value. You need to refer to the fair value standard as well. You learn that fair value assumes that transaction plays either in a principal market, high volume, or the most advantageous market, ABR. Also, you learn that. So that knowledge would be there. Price, what is mean by price? I'm not going to discuss highest and best use, whatever the stuff. The fair value hierarchy, you can see that this is triangle which has a three tiers. I think you can remember quotas price, equity, right? So as per the question again, write a report to MD why fair value is better. So you can see the fair value is simply in line with the SLFRS 13. As per the standard, the fair value is simply this, and it is in layman terms, it is referred to as a market value. You can write these terminologies. You need to write, otherwise we'll not getting full marks. Yeah. Okay, you need to write this definition as well. Okay, you need to write that definition. So with that note, you need to direct to the question again. So I'm using so you need to write a report to managing director of Suleiman Limited from CFO, as you are the CFO of that company. And date, subject, evaluation of the financial fair value accounting versus historical cost accounting. That should be there as a subject line. For the email also, you have a proper subject line. No. Introduction following your recommendation to adopt a policy of reevaluate. Give me 1 minute, please. So, following to your recommendation to adopt a policy of revaluing fixed asset every 5 years, that is in line with also LK 16. Entire class should be revalued. Let us assume you have 5 billion, you are revaluing 3 billion and 2 not revaluing. You can't do that as per the SLFRS, sorry, LK 16, right? Following your recommendation to adopt policy of revaluing fixed asset every 5 years, this report evaluates the advantages and disadvantages of fair value accounting compared to historical cost accounting. Although fair value accounting increasingly used under modern standards such as IFRS, International Financial Reporting Standard, it is important to assess whether such policy is appropriate for Suleiman Limited. This report summarizes key argument, definition, and relevant research findings to support informed decision making. Key concepts: historical costs assessed are recorded at or their original cost or the purchase price, depreciation based on the cost and the useful life. Values do not change unless the asset is impaired or disposal should be there. Fair value accounting. I should told you IFRS in global context, IFRS, Sri Lankan context, we have SLFRS. The price that would be received to sell an asset to pay as answer or liability in an ordinary transaction between market participant and a measurement date. I'm not going to teach you because as the under the ABR course unit, you may learn those stuff. In simple terms, it reflects the current market value. I show you this market value. Simply, fair value means depiction. Okay. 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 The revaluation model under the LK 16, LK 16 allows two measurement: cost model, historical cost. Revaluation means periodic update asset value to the fair value. A company choosing a fair value method must apply consistently the term important to entire class of asset. If I go through the LK 16, you can't use it. I mean, this is the LK 16. You can download from the internet, Google. Revaluation model. After recognition at asset, you can refer. If an item revalue, the entire class of PP should be revalued. Okay. As per the standard, you can see that. Arguments for adapting fair value, improved relevance and decision making, decision usefulness. Fair value accounting provides up-to-date asset values for the investors, lenders, analysts, and regulators, stakeholders, let's say. Researchers indicate fair value increase relevance and predictive value for the financial statement. This is not, you can't remember citations, no, that is not that much good a question. A better reflection of economic reality, asset values change over time, especially machinery subject to rapid technological advantage or the obsolescence, the current condition to the business, true replacement cost, more accurate financial reporting, the fair value accounting advantages, enhanced borrowing capacity, updated values may improve collateral for bank loans, creditworthiness, investor confidence. Collateral means conditions because some in order to get a loan you may have to some conditions. No ROI this much, your operating cash flow this much based on the not collateral, that is caveat. So the covenants of the bank loans. Collateral means that is a pledge. You are pledging some asset. If you take a individual loan, you need to have two that guarantee to the bank. If you not pay, bank will sell your land at auction and recover the cost. Okay. Compliance with modern accounting trends. Global practice is increasingly fair value accounting because it is transparency. ISB emphasize fair value to modern accounting needs, avoiding understated asset values. Historical cost may significantly understate worth of the long-term asset during inflationary period. Arguments against the fair value accounting: increased volatility in reporting profit. Revaluation gain or loss affect equity and sometimes profit. Subjectivity and estimation uncertainty. Valuation model discounted cash flow professional judgment because discounted rate you are using some kind of a professional judgment as well. The introduce uncertainty, higher cost implement professional valuers, regular revaluation every 3 to 5 years, depending on circumstance, additional audit procedures, complexity and risk misinterpretation. Non-accountants may misinterpret revaluation gains as cash profit. Potential impact on depreciation, reevaluate asset increase depreciation expense, profitability ratios affect and asset turnover, dividend policy. Since revaluation reserve cannot be distributed, recent research findings, academic positive fair value improves the relevance compared to the fair value accounting often higher market valuation. Investor prefer fair value disclosures. Negative, relatively decrease when valuation inputs are not observable. Fair value account increase earnings volatility without reflecting operational performance. Smaller firms face huge compliance costs. Consider for Sulman Limited. You suggested policy for entire 5 years. That is in line with the IA 16. Purchase price, 6 the estimated fair value, 3 at least. It indicates asset is expected to lose 50% of its fair value in 5 years. Under the cost model depreciation, 6 the වැඩිම 60,000 60,000 වැඩි කිරීම how many years? 20 21 22 23 24 25 26 5 years no. එතකොට ලක්ෂ 3යි. මේකයි 80ක් තියෙන 2.40ක් තියෙනවා කියන හොඳයි. Right? You can write conclusion adopting fair value every 5 years greater transparency. A balanced approach, reliable valuation data is available. The cost value does not overweight benefits, outweigh benefits. The board seeks improved financial transparency. That is, you can think and write even. You need to give citation for the LKS 16 and SLFRS 13. Okay. Second question, 5 marks, think and write, please. Set out in the charges P&L account for each year ending 31st. Set out the charge in the P&L for each year's ending 31st March to this March. Respect item plant which purchased for 480 and revalue 214 this day. Assuming the company follows normal depreciation policy. Depreciation එක අහනවා. Okay, grade 10 question. Okay.